From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for February 1st, 2018. Today we're going to take a look at the AUDUSD, the Australian versus the US dollar. For today's trade analysis, the first thing we want to observe, of course, is that this currency pair has been in an uptrend for quite a long time. We go all the way back to the beginning of December where it made the lows down here right around the 0.7500 level at the very bottom of the chart, bottom of the black trend line, and has been moving up ever since. We've studied the pattern within the trend. You can see the boxes here on the chart where the market went into congestion, a breakout, congestion, a breakout, congestion, a breakout, and reaching new significant highs all the way up here into the low 0.8100s. 8100, 8120 is the green shaded area at the very top of the chart. Follow it back to the left hand side and where the blue circle is, and you can see that that was the reversal point that caused the market to go down towards 7500. So very interesting level, the green zone. We looked at it over the past few days as the market challenged it as resistance. The blue zone, of course, has been our support for the past same amount of days, past few days, into 80, 50, 80, 25, blue shaded area. Follow it back in time, you can see that's where all the candle bodies stalled out just underneath the blue circle. The candle body stayed underneath that blue zone, again, eventually becoming a reversal point for the Australian dollar. So what we're looking at today is the market actually breaking through the support barrier. It's also breaking through the trend line. Look at the black trend line. It's pushing through the trend line, pushing through the support barrier there into the blue shaded area. What I want to do is take the old fib off, and let's take Fibonacci from the lowest low all the way down here at the bottom of the black trend line to our most recent resistance highs. So Fibonacci, lowest low to highest high, puts the 236 fib at 79.86. That's right where the market is holding as our support at the current moment. So what we're looking for is if this is going to become reversal and a continuation back down again, we're looking for signs and evidence of that. We need it to stay today under the blue zone. Remember, we do have U.S. non-farm payrolls coming up tomorrow as well, so it could significantly change how this currency pair is running. But right now, underneath 80.25, 80.50, that will now become our resistance zone. Where it was support, underneath it becomes resistance, 80.25, 80.50, the blue shaded area, just like it was over here again on the left-hand side of the chart. However, if by the end of day today this is a false breakout and it gets back above the blue zone, we may be looking for another new high. So what we really need to see is what happens to this daily candle. Does it stay under the blue zone and change the pattern of the trend, or does it get back above the blue zone as a false breakout and start to make a new high again? We need to be careful that we don't assume that this is the breakout. We want evidence of a breakout. Take it down to the 4-hour time frame. Now as we get down here, we start to see a little bit better evidence of that. Take a look. Found support here and support here, and now this is something new, where the market is now underneath that blue shade area. That's what we're looking for, a change of the status quo, a change of the pattern. As a technical trader, we're looking at patterns. And when there's a change in the pattern, we want to take note of it and observe it. So now that it's under the blue zone, if it stays underneath, again, this becomes our resistance, 80.25, 80.50, for a potential short opportunity. You know, the risk here is that it gets back above the blue zone. So if we decide to sell into the blue zone underneath it as resistance now, stop loss goes above it, because if it gets back above, that changes the pattern again. So the pattern is changing as it breaks through the black trend line, the blue shaded area. We're looking for an opportunity to go short. Risk is that it gets back above the blue zone. We want to be sure that this isn't a false breakout, so let's wait for it to stay underneath that blue zone and begin targeting back down to lower levels, back into the 79s and 78s for the Australian dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.